all life policies are going to have fees and costs. That's probably one of the most critical first steps, because when you normally hear about investing in life insurance, the most common thing you're going to hear is that you'll never make money. And that is true if you have an expensive policy. And that's the way, unfortunately, most insurance is sold. There's a big variance between cost between one policy to the next. It can even be 2 or 3 times the cost, or it can be 10 times the cost. I mean, it's rather ridiculous, the variance between a lot of these policies. And there's a lot of leeway that the agent has in how they set it up and keeping it a low-cost policy for you. So most of the policies I use are going to usually have a one-time load in that 5 to 8% range. Now, while that may sound high to a lot of people, the key is that's one time in that 5 to 8% range. And I would submit to you that's probably the lowest tax you're ever going to pay in your lifetime. Because what that does now is now that money is going to grow and it's going to be tax-free for the rest of your life as you're going to take it out of the policy through policy loans, and it just stays tax-free. So that's that's much better, again, than paying 20% in taxes every year. Once you get the loads done, then you have your ongoing cost of the policy, which should be averaging around 1 to 1.25%. That's the way I structure it. Now, again, there's a big variance from company to company. I have specific companies that have certain policies that are very low cost, and specific ways that we structure it to make it very low cost that really most agents don't do, most advisors don't know about, either because sometimes they don't know. A lot of this stuff you won't get from the insurance company. Insurance companies come out, they give you the training on their product, and they're going to give you all the rosy stuff and how good it is. You have to kind of be able to know how to analyze the internal workings of it, see what the costs are, and make sure you're getting the lowest cost. And so when I'm doing these at the lowest cost, I can structure these for someone that's in their 30s, 40s, or 50s, or even someone that's into their late 60s, and still make these profitable in the second or third year. Normally, I would say that's kind of one of the other downsides is it takes about 2 to 3 years, or I would say even 3 to 4 years before you kind of break even, because you have to cover your loads and costs going in. It's kind of like building a business. You're paying your costs to get everything set up, but now it creates a tax-free income source for you for the rest of your life, and that's a very good thing.